Good morning, everybody, and welcome to today's webinar on CSRD. We're delighted to have you here, and we will just, before we get on, I'll just kind of take you through the agenda for today. We'll go in a moment through introductions of your speakers, and then we'll move into setting the scene of what's happening and why with CSRD. We'll talk about the deadlines, who has to report, and then move into talk about what people have to report. And then finally, we'll finish off talking with how technology can help and support the end-to-end process. So, introductions. So, my name is John Lyons. I'm ProStrategy's Practice Director for Analytics and Business Performance Management. As many of you know, ProStrategy have been providing financial reporting, financial planning, scenario modeling solutions to our customers for many years. These customers who are traditionally have been responsible for financial reporting have recently also been given the task of helping or managing CSRD reporting. So therefore, we have done research in the market to see what solutions are out there which we could bring to our customers to help them with that process. And through that research, we identified a company based in Belfast called SustainIQ. They were established in 2017, 2018, with the vision of providing an online platform that allows organizations harness their ESG business intelligence, which previously wasn't being, I suppose, considered in the strategic decision-making process. So I'm delighted to be joined today by Liam McAvoy, who's a co-founder and very experienced in the field. So Liam, thanks for joining us today.
John, thank you for having us. Delighted to be here. Good morning, everyone. As John said, yeah, I'm one of the co-founders of SustainIQ. And I suppose, guys, a bit of a background to me. I've been working in sustainability for nearly 20 years now across industry. And I think the biggest issue for me during that time, during my career, was accessing accurate and reliable ESG data for reporting. I was just trying to source it so that we could compile it for reporting. And I suppose like SustainIQ was born out of that need to make it easy for customers, certainly our customers, to capture their data and then ultimately report on it. And we're really passionate actually about working with our customers to help them use the data to take a more data-driven approach ultimately to ESG, and in particular those big investment decisions maybe around net zero that we all have to make in the coming years. So really looking forward to getting into today's session, John. Getting a bit deeper into CSRD, what it looks like in terms of compliance, and how digital solutions such as SustainIQ can ultimately help businesses with compliance.
So just, Liam, before we get into the agenda, I'll just maybe put up an intro slide to yourselves just so people understand. So SustainIQ provide an ESG reporting software that empowers businesses teams to capture real-time performance data company-wide across the 4 dimensions of responsible procurement, environmental management, your own staff, people, health, diversity, and then across community engagement and partnering. So we will come back to, I suppose, how your solution can support companies with their ESG, CSRD journey later in the presentation and webinar. However, just to kind of provide people that overview before we get into the detail of CSRD. So with that, we'll talk about setting the scene.
Yeah, John, absolutely. And I think like most folks on the call today will be aware of CSRD, and they'll be aware of what it actually means in terms of impact to their business. But just quickly, in terms of a bit of a recap and to set the scene in terms of what it is actually all about. So really, it's the European Commission. I suppose putting ESG performance and ESG reporting on a par with financial reporting, which we've all been doing now for quite a while. So it's really tied up in and focused on non-financial reporting on a par with financial reporting. And the proposal was adopted back in 21. So we've been sitting watching it kind of work its way through these last couple of years. But in terms of impact, I mean, you're looking there at over 50,000. I think it's over 70,000 actually, businesses that are going to be impacted by CSRD. And we'll get into what that impact actually looks like shortly. But it is EU legislation, but I think it's important for companies to also realize that even if not based in the EU, but operating within the EU, you too may be implicated by the legislation as well. So it's all going to be phased in over a number of years. It's going to impact all of us at different times, depending on criteria and where we fit. But it really kicked off there January 24 with the first batch of companies impacted, 25 for reporting. So it's already launched. And then just in terms of, I suppose, taking a wider global look at the structure and where this is all coming from. CSRD itself is the legislation. We're going to jump in shortly into the ESRS standards, the European Sustainability Reporting Standards, which sit just under, kind of providing us with the framework in terms of what needs to be done for compliance. But on a global scale, the legislation is being driven by the financial regulators, specifically the financial reporting standards. And I think that's really important point to make in terms of where CSRD is coming from. There's a clear alignment with a company's financial performance and then their non-financial, their ESG performance as well. And the ISSB, the International Sustainability Standards Board, have introduced these new global guidelines aiming to set the global norms around sustainability reporting, and it's needed, so like when we look at the last decade and the reporting that was being done, there was no consistency, there was no control. So now what we're starting to get are those control mechanisms, putting it all on an even field in terms of where we set off from, and so it is needed, and we're finally starting to get that shape. We're finally starting to get that structure, even at a global scale now. CSRD obviously coming out first in a way and leading it, but that there hopefully gives you a little bit of an idea in terms of structure, and it is a global movement, and some of you will recognize many of the logos on screen there as well.
Right.
And I think that's a really important point to make. CSRD is in where it started that journey, and it's going to have a big impact. But it's important to know that there's a lot more to come, and you just have to look at the legislation that's pending, that's coming down the road, and you start to get an idea that we literally are at the start of a journey, and there's going to be a lot more coming down the road. Even within the UK, for example, they're going to have their own version of CSRD. We're going to find out more about that in the summer, called SDS, and so on there as well. But a lot more coming around the financial aspect, the financial implications, the monetary value around carbon, all of these things starting to become a lot more clear. Therefore, the impact all of that has on our businesses as well, going forward. So, yeah, I think the big thing to take away from today will be just, again, a lot of you will be up to speed, but it's just really understanding the direction of travel with regards to all of this stuff, in particular CSRD, understanding the impact it has on your business, your sector, your customers, and then ultimately understanding the expectations there for your business in terms of compliance with all of that. So it's just taking a wee bit of a look ahead and making sure that you're prepping, you're getting ready for ultimately reporting on all of this stuff.
So moving into the deadlines, dates, etc.
Yeah. I think, as I said, the legislation is kicked off there. So the first batch of reports expected 25 based on 2024 performance. Certainly the vast majority of SustainIQ customers will be impacted in 2026 based on 2025 performance. And so it will be phased in over a number of years, but it's really not that far away. So if you're a big corporate, obviously you'll be already tracking 24 data to report next year. But if you're into 2026 and you're going to be impacted from that point onwards, really you're looking now in 2024 to be getting the processes in place within your business so that you're ready to start tracking end of this year, certainly start of next year, so that you're geared up for that 2026 reporting requirement. So yeah, 2025 is for those organizations that were already complying with the NFRD, so the big corporates typically. And then, as I say, the vast majority of our customers impacted 2026. And then 2027 we'll have the listed SMEs, and then 2029 onwards for those third country undertakings. Again, the criteria is all set out. We'll get some information set out after the webinar as well. And it's really just, again, to understand which phase you guys fit into, and then ultimately how much time you've got to prepare and get the process in place within the business to start the flow of data, so you've got access to it, so ultimately you can report and comply with the legislation. But it's happening very quickly, guys. 20 years I've been working in this field, and I've never known anything to move at such a rapid pace. And there's pros and cons with that. It's brilliant that we're in this place and we've got this kind of structure for reporting, but equally the cons around the speed at which it's moving. The big one for me would be supply chain. We can't achieve any of this without them, so we all have a responsibility to make sure that we upskill and educate so that we can bring everyone with us on this journey, because obviously without the value chain there's not much we can really achieve. So yeah, I would just be aware timelines are, no one's expecting this by Monday, but the timelines are still quite short, and it's about using this window of opportunity to really get the business prepped, so that you can start that flow of data, get that visibility of performance, and ultimately enable reporting whenever you're initially impacted by whichever phase that you fall into.
And as you say, Liam, if you're in the category that may not need to report, say, until 2026, that means that essentially for 2025, you need to have the processes in place capturing the data so that when it comes to producing the report in 26, that you've actually captured it.
That's it. And I think, John, as well, it's important to note, and again, we'll get into this a little bit shortly, but the amount of data required for ESG is vast. It's huge. Now, in some cases, a lot of organizations have a lot of it, but it's scattered, it's siloed, it's in different places within the business. But ultimately, when you look at the volume of data required, a digital solution of sorts is needed to pull the data into one center location, so you have access and visibility of performance. So yeah, if you're impacted by phase 2, then really this year is really your year to really scope out exactly where you're at, where are the gaps, what data have you got already, but ultimately what are you missing, so you can start getting the things moving in those areas as well, so that by the time you get to the end of this year, you've got that solution in place. You understand what it is that you're tracking, so that you're back into 2025 recording the data you need to ultimately comply with the 2026 requirements. And even just the screen before sort of set out what that sort of criteria looks like. So again, we can send this out after, but they've been pretty clear in terms of the criteria and what it is that in terms of your company and where you need to be. And they did adjust, they made a slight adjustment there of 25% with regards to thresholds. And those numbers on screen are the most recent and up to date in terms of the criteria.
Right. So what do I have to report on?
Perfect. It's it's nearly easier to look at what you don't have to report. There's so much. There's so much. I suppose, look, it can be overwhelming. I think it's important not to get overwhelmed because, again, there's time. We've got a window of opportunity here to do what we need to do to get ourselves all geared up and ready to go. But I think, look, that, and we'll get to this shortly as well, but that is why we created that 4-pillar methodology within SustainIQ to kind of make it simple to understand what it is we actually need to track, because there's huge amounts of data across the E, the S, and the G. I think, like, the first port of call is going to be your double materiality assessment. It is a requirement for CSRD. And I think what's important to note, because ESG is vast, you can't report on all of it. It's just impossible. So that ultimately, that double materiality assessment is an exercise organizations will complete to identify what is ultimately material to the business, and therefore what it is you have to report on. And in terms of what it is, when I talk about like double materiality assessments and so on, like the word there is the operative word there is kind of double. So organizations have an impact on people, they have an impact on the environment, positive and negative. So it's understanding the impacts that you're having on people, your staff, your supply chain, your value chain, maybe the communities in which you work, the impact on the environment, again, good or bad, and understanding then ultimately where the risks are. And that would be known as like the inside out view, I suppose. Then on the other hand, sustainability related developments and events create new risks and new opportunities, such as, organizations are will have opportunities to maybe create like new products, new materials, more sustainable products, more sustainable materials, maybe more in line with circular economy and so on. So there's huge opportunities, but then also the negative impacts, maybe through brand or reputation and so on. So that would be the outside in view. And so it's taken, the double materiality assessment is taking into account all of those, and ultimately then identifying what is material to the business, and therefore what it is you need to report on under CSRD. So that's the main sort of takeaway there. It's the need for that double materiality assessment, and ultimately the output of the materiality assessment will highlight what it is you guys will each need to be focusing on. And depending on your business, your operations, the jurisdictions that you work in, all of that means that the output for most will be different. It's very sort of specific to your business, to your operations, but it's the starting point really for a lot of this. So we'll not go through all of those today there, John. I think the main point there really is around the double materiality assessment
Right.
itself.
Okay. Move in.
And then I think this bit is the main bit really today that I wanted to get to, and it's the ESRS standards, the European Sustainability Reporting Standards. And I suppose, like, the best way for me to get my head around this is CSRD is your legislation. It's what we need to comply with. ESRS, sitting just under that, sets out the framework that needs to be followed to ensure compliance. So CSRD is the legislation. ESRS is ultimately how we're all going to then comply with CSRD requirements. And they were only published last, I think it was August or October. So again, just out, not that long, but it was brilliant again to see them, because again, CSRD, we've been working its way through. ESRS standards came out, and then it properly gave us a good idea of structure, what was required in terms of reporting, how companies were going to report. So it just started to shape it all. So it was brilliant to see those coming out. There's currently 12, 2 mandatory and then 10. But I think, again, just looking at the terminology that's used when they were published, the Commission referred to the first set of ESRS standards to be published, so fully expecting more to come. So
And I suppose the good thing, Liam, is, as it says here, the frameworks seem to be aligned with the frameworks such as IFRS S1 and the GRI standards. So, there is a harmonization of the various frameworks. So when you do this work, hopefully you'll be able to comply with whatever other bodies you need to comply with as well.
John, no, absolutely. And I think just thinking back to that earlier slide of the structure, it's exactly that. It's kind of harmonizing a lot of those other standards that again a lot of our customers would be reporting on. So rather than having all these different sort of requirements, there's a little bit of alignment there, which again is helping everyone it's still a huge amount of work obviously required under CSRD, but absolutely it's bringing a lot of it together, which again it's important to remember that the data now, the ESG data, is required for CSRD compliance, but it's required for so many other things as well. And we always say to businesses as well, even if you're not initially impacted by CSRD in terms of the criteria, in terms of the legislative requirements, you will probably still be impacted commercially because your customers, you'll be maybe part of a value chain there. They will be needing the data from you in order for them to comply with CSRD. So even if not initially impacted, you will still probably commercially be impacted. So I think it's something that's impacting all of us, no matter the size, no matter the sector, no matter the location. And we all need to be aware of ultimately the impact to the business. But those ESRS standards, as I say, it's good. It gives us a bit of structure. ESRS 1 explains guidelines about general disclosures for all sustainability matters. ESRS 2 outlines the specific framework guidance for structuring the sustainability reporting. And I think, John, if we nip to the next screen, it sets out the 10 topical standards that were published then last year. And you start to then, even by looking at those, you start to then understand, okay, right, this is what it is we need to report on as a business in order to ensure compliance. So within the E, the S, and the G, they broke down the different sort of topical standards. So obviously under ESRS E for the environment, we've got E1, climate change. Vast majority of us, no matter what we do, will be impacted by that in some way. E2, pollution. E3, water and marine resources. E4, biodiversity and ecosystems, and E5, resource use and circular economy. And again, the double materiality assessment will identify which of those is most material to your business. Under the S for social, we've got ESRS S1, own workforce, so that's your employees. Then you've got your workers in your value chain, so it's extending out. If you've got a big supply chain there, that's obviously going to be impacted there as well. And that's back to that point that even if you're not impacted initially by the legislation, if you're part of that value chain for your customers, then you're still going to be impacted potentially. Affected communities, we're all working in communities, our offices, our production sites, whatever they might be, all having an impact. Again, it's important to be aware of that. And then ultimately consumers and end users. And then under governance, the G, we've got ESRS G1, business conduct. Again, a lot of corporate responsibility, policy, procedure, process, obviously around modern slavery, payment policies, all of the typical sort of stuff, just ensuring that we have that structure within the organization. So ultimately, when you complete your double materiality assessment, it's going to highlight which of those is really material to the business in terms of reporting. And then by doing that, and by reporting on the ESRS standards, you're ultimately then working towards compliance within CSRD. So I hope that sort of makes sense in terms of how they all kind of interlink with each other.
Yeah. And then, as you say, the ESRS then lays out for each of those areas the detail of what one would require to put in place, both in terms of policies, actions, and the targets that would be relevant for each area.
That's exactly it. Yeah. So look, again, back to the impact and back to the amount of data that is required. I think the Commission acknowledges that. It acknowledges the impact it's going to have on businesses. And so back in June last year, they did announce, in an effort to ease the burden of this on companies, that they proposed allowing companies with fewer than 750 employees to emit Scope 3 greenhouse gas emissions. And Scope 3 is the vast majority of all of our footprints. So it's a big piece of work. So that's been emitted. And ESRS S1, which is our own workforce disclosures. However, it's important to note that that's just for your first year reporting. It's not an ongoing thing. It's literally just to ease the burden for that first year. And then with regards the other disclosures there below, ESRS E4 biodiversity, S2 workers in the value chain, S3 affected communities, and S4 consumers and end users. And again, that's just for the first 2 years of your CSRD report. So the top two, you get a 1 year kind of ease, and then the bottom four, you're getting 2 years, but both are just temporary. It's literally to ease the burden of reporting. It's still something that still very much needs to be on your radar if they're considered material to your business. So I wouldn't ignore them and think, don't have to worry about that now. It just means you've got a little bit longer to get a process in place in order to get access to the data in order to report. So, but, again, it's an example of the Commission recognizing the impact and therefore taking steps to ease that for businesses.
So essentially, we're all going on a journey. It's just some of us might have to ramp up a little quicker than others along that journey, depending on your size.
That's exactly it. That is it. Yeah. And I suppose this is where we fit, John. And people are probably bored of me constantly going on about it. But the reality is, none of this is possible without the data. We all need access to the data in order to report. And I always say, like, the last 10 years, 15 years, when we look at sustainability, it was very much a nice to have. You were able to put a lot of stuff out there without it really being criticized or scrutinized in any way. And the next 10 years and beyond is completely different. It's first of all a must have, but the data to back up performance is critical so that you can constantly back up you are doing what you say you are doing. And in order to comply with both CSRD and the ESRS standards, you need access to your own ESG data within your own organization. So it's critical. It's the one area where and again, if people today on the meeting, on the call, haven't started, it's not about panicking. There's time, but it's to understand that one of the key areas where you need to make a start is starting to get access to a lot of the data that you're going to need for reporting. We'll take a look at that shortly in terms of what that looks like. But data is key. We've a phrase, we've a saying, data is key to good ESG, and it really is. So.
And as you say, organizations may have a lot of this data somewhere in the organization, but it's typically not integrated and reported on with the same, I suppose, rigor that, say, financial data. However, because of the audit requirements around CSRD and the public nature of it, it now needs to be treated in the same way that companies have historically treated their financial data and data management.
And that's it. And John, you made a really good point there, and I think it's important for everyone to remember. Like, again, when you look at some of your customers and folks joining us today, you have a lot of this data already. You don't do what you do, work for who you work for, and not have a lot of this information. So a lot of it exists. A lot of it won't, but a lot of it does exist. And so it's siloed. It's on spreadsheets. It's maybe in software that's detached from other. So it's just a bit of a scoping exercise to find out what is it we actually currently have and what is it that we don't. But it's important to remember that a lot of it will exist, and it's just about centralizing it for the first time, because mostly we haven't had to. It served another purpose for another reason, for another department or another role. And I would say, just in terms of those departments and not those roles, that we're seeing the trends. Again, the last 10 years, one department that probably was sheltered a lot from the whole sustainability kind of movement was probably procurement and those finance teams. And I would say they're the biggest example of departments that have been impacted by ESG. certainly the trends we're seeing, the finance teams take ownership of ESG, but then the procurement teams, like we need so much data from the supply chain, and we cannot get to the supply chain without going through procurement. So we're seeing those procurement teams in particular really, really get impacted. And it's all to do with access to the data. So huge trends. And then just with regards to data, I think this is a practical point. It's more logistical, and we'll not go into it today, but it's just to make everyone aware that yes, you're publishing your CSRD report, but you also have to provide the data so that you can back up that what's been published in the report is actually what you're doing. The performance is what ultimately has been published. And so a requirement is that all of the data is to be tagged, similar to what is done with financial reporting at the minute. And so that the commission can ultimately then, scan the data to make sure that what is being published is obviously backed up then with regards to your performance as well. So it's just important that that type of stuff is what would catch people out. There's deadlines for reporting, and it's just remembering to build in time for some of the practical elements, such as the tagging of data. SustainIQ, for example, we hold the data. We've got lots of templates around the reporting, and we don't tag because tagging is very much an industry in itself. So we've got a partner business that we work with, and where the data can be sent to, they can tag it, and we can get that verified and then upload it to the commission. So it's just about building. It's about A, being aware of that, and B, building in enough time into your sort of schedule to make sure that can be done before the deadline approaches as well.
Right. So
again, we've a lot more on that data tagging. Again, if anyone today wants to find out a little bit more about that, John, they can contact you guys, and we can get back with any answers to queries and so on as well.
right. So we'll move on to how technology, and specifically the SustainIQ solution, aligns.
Yeah, no, absolutely. And I think, like, when you start to look across the amount of data that's required, I think it becomes clear to most organizations that they need some sort of digital solution to help them access and capture the data and then ultimately report. And that's where we come in. So we're like the all-in-one ESG reporting platform. It was important to me and the other co-founder when we were setting out that, yes, there's lots of standalone tools out there that do great things, but for us, the real value for our customers was by centralizing the data all in one place, so that you would have full visibility to the information and really understand your performance. It would then also allow you to start to drill down in and interrogate the data as well. So those 4 pillars that we have designed and built SustainIQ over, we purposely did it like that to make it easy for customers to report on their ESG performance. And across the 4 pillars, we've got over 250 data capture points already built in, and there's a lot more to come. So we've taken the pain out of what it is you have to report on, and we have that all set out. So by simply following the 4-pillar methodology, you're already capturing lots of the data that you require for reporting. And just to give you an idea of the different types of data that, it's easy just to talk about one or two, but in terms of our responsible procurement pillar, it's all things to do with products, materials, and supply chain. We've got embodied carbon calculators in there that we use environmental product declarations to capture the scope 3 emissions of embodied carbon. We've got a lot of automated forms and a supply chain portal that we can easily allow our customers to collaborate with supply chain around carbon reduction commitments and getting access to their data and so on. So lots of governance and due diligence also built under the procurement pillar. Environmental management tracks all of the key indicators: your greenhouse gas emissions, your waste management, your water usage and natural resources, your biodiversity conservation. Typical indicators there that you would be expected to track with regards to the environment. Under the people, health and diversity pillar, that's us now moving into the S of ESG, social value, but that pillar focuses on internal investment in people. Hopefully, as I talk through these, we're starting to think about the ESRS standards and how this all fits. But under people, health and diversity, we're really looking there at training and development, those investments in your people, diversity, inclusivity, health and well-being, health and safety. Also apprenticeship and placement opportunities that are being created by you, by your business, all of which is having a massive social impact. And then the final pillar is community engagement and partnering. So again, social value, but this time with an external focus on relationships with stakeholders, community organizations, charitable donations, volunteering, schools, colleges, university engagement, all of that stuff. So typically our customers then track performance across those 4 pillars. That's the type of information, that's the type of data that they're pulling into SustainIQ. And ultimately that's all brought into one big central dashboard from where they can then drill down, interrogate, and ultimately then generate the reports that they need to for the different stakeholders, including CSRD. Just in terms of getting the data in very quickly, we've tried to make it as easy as possible. We've got an API which allows for integration with other software, so we can automate and pull and push a lot of data back and forth. We can upload spreadsheets. We use automated forms using lots of different tools, including the SustainIQ app on a mobile device, tablet or phone. So there's lots and lots of ways there that our customers are capturing their data and easily getting it into the system. But I want to look now at how SustainIQ can tie back into those ESRS standards. So you've done your double materiality assessment, you've identified what ESRS standards are material to your business, and it's all about, okay, now I need to get the data so that I can report. So those are the 10 topical standards there, just a reminder on screen. And then, John, if we jump on to the next screen. So this, we're just going to take one example today. It's a big example. So it's climate change, ESRS E1. And even when you just take one topical standard like E1, climate change, and you then break that down, like it's a huge amount of data that an organization has to now get access to report on. So when you take your emissions have now been split into 3 categories. We've got scope 1, we've got scope 2, and we've got scope 3. So all of this is tracked in SustainIQ. So scope 1 might be your company-owned fleet of vehicles, plant, equipment. It could be your diesel usage, oil, gas, all of that typical stuff. So that's all tracked through SustainIQ in a variety of ways, including invoicing or integration, whatever it might be. Scope 2, typically, again, maybe electricity, that type of stuff. We can integrate with smart meters, but equally then, data can be added through the app as well. And then scope 3, which is a big area. It's probably the biggest chunk of most companies' carbon footprint, because we're stepping out into the supply chain in a lot of cases, and we're looking at embodied carbon, which we do in our calculator using the environmental product declarations. We're capturing those scope 3 emissions from the supply chain using the automated forms, such as deliveries and all of that good stuff. As well, we're tracking commuting, we're tracking business miles, maybe it's flights, maybe it's transport that's claimed back through expenses. So you start to get an idea when you break down scope 1, 2, and 3, the amount of data that's required, and then SustainIQ has been designed and built so that it's easy for our customers to grab all of that data in real time and pull it into the dashboard for reporting. So that's how we kind of pull it in to the system. And then if you're thinking about all of that data, there are just examples there of different ways that we can get, for example, something as simple as diesel. It might be just manually entered, it could be uploaded, it might be pulled through an integration. There's lots of different ways there to get the data in. We've got all of the carbon factors in SustainIQ. So we currently operate in just over 30 countries. So we have a lot of carbon factors. And using mapping, SustainIQ always knows where each site, each location is. It might be a production facility, it might be an office, it might be a construction site, whatever. The system will know where that location is and will apply the applicable carbon factors for that jurisdiction. So in Ireland, we're using the SEAI carbon factors. Obviously, they're all built in. As you add usage in terms of diesel or electricity or whatever it might be, the system is automatically calculating the carbon using the applicable carbon factors in the background there as well. So the system's automatically, from a very simple bit of information that we could get from maybe a an accounts team or something like that, it already then starts to generate a lot of the data that's required for reporting. And then if we tie that back to ESRS, we start to get an idea how, by tracking that type of data around emissions into the system, which is then calculating all of the different calculations in the background, we start to then get an idea of how we're going to start to comply with the different ESRS standards. So in this particular case, SustainIQ is helping customers comply with the ESRS E1 climate change, ESRS E5 resource use and circular economy, but also touching then on ESRSG business conduct, as well as 1 and 2, the general requirements plus the general disclosures. So it's quite interlinked in terms of ticking off a number of different boxes. But again, it's all back to that initial data capture and then what we do with that data within the system as well.
So
I am sorry for interrupting.
Sure.
We just have 5 minutes left and we have a couple of questions. So if you want to.
Yeah, we'll finish up. We'll finish up quickly, Monica. I think that's us kind of moving quickly towards the end.
I suppose just for those, just to give an example of the types of companies you're working with.
Yeah, John, absolutely. Look, that's all we're trying to do there is we're working with a lot of big companies. That's just a few there. It's really just to, I suppose, in terms of giving confidence to people joining us today. The tech is being used. It's been trialed. It's been tested. It's working really, really well, and it's delivering for lots of customers. So it's really just to let everyone know that the tech is well established. It's quite mature, and it is doing what it needs to do there. So again, lots of customers. We've got lots of case studies on our website, sustainiq.com. And yeah, we just encourage anyone to interested in maybe finding out more to jump onto the website, maybe explore some of those case studies that are available. And again, any queries or questions, we'll deal with some of them now, but even after today's webinar, if things start to come to mind, just feed them back through ProStrategy, and again, we'd be happy to deal with any of those queries as well.
So, Monica, would you mind just reading out the questions, please, one by one?
Yeah, absolutely. We have a question here from James that if you are due to report in phase 2, like in 2026, is there a requirement to show comparable data, for example, in 2025?
So if you're due in 26, it's based on 2025 performance. If you have comparable data from the year before, if you've got your baseline year, then I would definitely be including that. But it's really 26 is based on 2025 performance.
We have another question, and does the system facilitate scenarios analysis that is mentioned within the ESRS E1 climate change standards?
Yes. So again, we've got a predictive tool. It's due for release quite soon. It's currently being tested, and using data within the system, particularly customers' data, it will predict. So it's really around helping our customers use the data in those big as part of the big decision-making processes that, again, we all have to make, particularly around net zero. So those investments we're all going to have to make in the next couple of years. And what we want to do is use the data to help guide that process. So using the predictive tool and the data that's in the system for your business, it will give you a little bit of a steer in terms of where best to invest. It might be looking at renewables. It might be looking at EVs or different methods of transport and logistics. But that predictive tool really is there as a guide to help inform those conversations and ultimately those decisions around investment as well. Okay.
Thank you, guys. We don't have any more questions in the chat.
Okay. Well, again, any more that maybe...
I'm sorry, yeah, we have another question.
Okay.
Does SustainIQ produce a final report which is complying with all the ESER report? Yeah.
ESRS standards, yeah, it does. So there's a number of templates in the system. I suppose what I would say, the templates are there. We can publish the reports. Two things. Number one, that's That's step A. You get the report. Step B then is the data, which must be tagged. So all of the data is then in behind the report. It's in the system, but that needs to be then sent off to be tagged. We don't do that, but we've got a partner company that does that for us. So then the data is ready to be submitted as well. I suppose just one other point on that we're seeing a little bit more of. So the reports are being published, and we're starting to see companies get design houses involved in terms of designing up the reports as a much more sort of big kind of document that's been shared widely. So yes, we've got templates in the system, and absolutely you can produce the reports in the system, but we are also seeing those big corporates at the minute also getting design houses involved to kind of take the report, if you like, to a whole next level.
Yeah.
But again, happy again through ProStrategy. Anyone that wants more information, anyone even interested in maybe getting a demo of the platform and how it might fit for your organizations, again, ProStrategy can get that all set up as well.
Anything else coming through, Monica?
No, I think that's all. We don't have any more questions.
Well, look, I think we're just kind of a little over the time. So, Liam, thank you very much for participating in today's webinar. It was really great kind of overview and explanation as to how SustainIQ can really guide the journey and facilitate your compliance with the requirements. We will kind of reach out to everybody who participated to send on the recording, and also offer them an opportunity to have a kind of one-to-one session on how we can work and set up a demo if so desired. So Liam, thank you. Monica, thanks very much for setting the session up and orchestrating it, and thanks for all the participants who joined today. Hope that you got something out of it. So thank you very much.
Thanks, John. Thanks, Monica. Thanks everyone.
Thank you, everybody.